Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, July 8th, 2009. Well, it's been a whippy day today, folks. We've seen a nice little gap up, whipsaw early for the first half hour to hour of trading, then an ultimate rollover on oil inventories. As oil inventories came out, the price of oil plummeted. We saw another nice down day, at least to the point where oil was down over $2 on the day, and then all of a sudden, folks, what we did see here was the auction coming out just about 10 minutes ago and boosting the markets up in a major way. So we had a lot of stuff going on today. It was relatively quiet early on, but at 10:30 the markets were floating up after the little bit of a down move yesterday. 10:30 a.m. Eastern time this morning, oil inventories came out. What happened in that situation? We saw the markets start to tank as oil tanked. ExxonMobil started to really roll over. I'll show you the chart of ExxonMobil. Take a look at this. Right here was when oil inventories came out. ExxonMobil rolled down hard. The markets went down with it. You saw Goldman Sachs today and financials getting hit hard, although Goldman is getting a huge bounce now on that Treasury auction. But look at the move down on Goldman Sachs ever since yesterday off of this nice bearish in spirit of bear flag pattern. Roll over, continued today all the way down to key support right around 136, 135.50. The bounce coming right in here. All right. Now, again, as I mentioned, folks, so we had the 10:30 a.m. Eastern news on inventories that really started to roll over because commodities, remember, commodities are a huge portion of this market. When you have commodities and you have financials like Goldman Sachs, JP Morgan, Bank of America, Morgan Stanley, Wells Fargo, all of them rolling down with commodities, that's when you're going to get the big sells on the day. And what you saw here, folks, is the market really roll over with Exxon. When Exxon rolled over and commodities rolled over, we went to a minor support level at 87.50. We bounced off of that 87.50. Then we rolled down again. Look at the little bearish pattern right there. Beautiful bearish pattern rolling over. Where did we go to? 87 even number. That is support, folks. That is support on the intraday here. Right off of that, you started to get a bounce. And then what happened? We had a pause candle right here, a bullish pattern pause candle. And you have to understand how to recognize this stuff. And that's how you why you join the research center, by the way. Bullish pause candle right here inside bar. And then what did you get here? You got the auction. The 10-year auction went off with a huge bid to cover of 3.28, I believe it was. Just an unbelievable bid to cover in this situation. That gave the markets a tremendous bounce right here. And believe it or not, the Dow was only down 22 points. The S&P is only down 6 points, and the NASDAQ's only down 9 points. So, yes, it was a nice rollover today, a very sharp rollover, but we were gapped up, so the rollover is really not as big as you might think. The low yesterday was right here at support at 88. Today we retested that, broke it, and now we're trading down. We traded down to basically 87 from 88, 1 point on the SPY, and the bounce has taken us all the way back within about 40 cents of break even right here where we closed yesterday. So that's where we're at right now, folks. Good push up, good close on the markets. Very nice little move. And what, again, you're going to watch for is, do we see continued buying off of that auction? That auction, again, very good, as it came across a lot of bidders out there for the U.S. 10-year debt right now. Now, the question is why? Is it because they haven't done a second stimulus yet? Because they are not printing as much money? Because the market seems like deflation is still an option, so it's telling people that you can buy longer-term bonds and still get paid off decent without too much hyperinflation? That's all an issue here, and all has to be looked at and really monitored. All right, but nonetheless, a beautiful move. Then you just closed above this level here at 87.50, so your next target, if you can stay above in this candle, remember, you need to establish yourself. You need to confirm the move above 87.50. If you do it, your target would be the 20 moving average at 87.80. If you get through that, then your ultimate level is 88. 88 should be a pretty solid resistance level in this market. We want to keep a close eye on whether or not this is going to continue to be a solid area. We'll watch it very closely in this realm, all right, guys? So keep a close eye on everything that goes on here. The rest of the day could be very key. Now, remember, today after the bell, Alcoa earnings, tomorrow morning jobless claims, so there's a lot of things now coming out starting at the end of today after this bond auction now that's going to be a real big situation. All right, so a lot of things to go on here. Keep a close eye, and we'll monitor it. And again, folks, just an announcement here. I want to make a general announcement. The webinar is this weekend, Saturday. We have to do a 5-hour course on our methodology, teaching you major things here, stuff that you will not learn in a textbook, things that are proprietary to us. I do encourage you to come learn it. You'll figure out counts, how to know and recognize all sorts of patterns, counts on cycles, and a lot of different stuff like that. Very important stuff, all right, guys? So I do encourage you to sign up at InTheMoneyStocks.com at webinars, education webinars and seminars link on our website. Now, again, just note here, you're starting to tick down a little bit. So, again, if we come back below 87.50, that tells me we could see a double bottom test here, or at least a move down to this pivot low right here at around 87.25. If we're able to stay above this dotted line, then you're looking for the 20 moving average, and ultimately, if you get through that, then you are looking for this 88 even number level. That will be resistance, guys. But there's been some good scalping opportunities today for those of you that are kind of entrenched in the overall intraday stuff. If you want to know more of the swing trade and the long-term investor, that's where you join the research center. Can't stress that enough. It's also good for day traders, but more geared towards the swing trader, the longer-term investor out there that really wants to know what's going on over the next few days, what's going on over the next 2 months, and so forth. And we give picks, pro trader watch list, hot charts, and alerts continue to be on fire. We put out, I should say, another key chart yesterday, mid-afternoon on the hot charts and alerts, and the stock is already down $1 off of those levels from where we posted a great move on that, and that's really what you're looking for. You're looking for a swing trade on those type of deals, and a beautiful move on that. All right, folks, that's all for now. Again, watch what happens here in the rest of the day. These are your levels on your charts. This is exactly what you should be following. Come join the webinar. We hope to have you, and also join the research center in the chat room. We'll see you soon. Take care.